Are we live for real? Is this thing on? Check. I think it is. Okay. Good morning, everybody. Welcome to the morning show. Got a great one for you today. We'll have Jeff Hirsch on the show. He is the author, the editor, the publisher, the everything of the Stock Traders Almanac. It's been too long. It's been like 9 months, dare I say, since we've had Jeff on the show, which is too long. We've passed through several seasons since then. So we'll have Jeff Hirsch on to talk seasonality with us at 9 o'clock. We'll have Kenny Glick. And then that'll be the plan for the day. So let's get the show on the road here. I got JC here. So JC, should we dance? Let's go ahead.
All right. We are back. Isn't it nice? Everybody's back at work, normal. I'm starting to understand this whole like fall thing more, like with the kids, now that the kids are in school, you got like a routine. Like I could see like parents that have like older kids that have gone through this cycle like so many times are like, wow, I can't wait for the kids to get back. And it's not so much like you want the summer to be over and the kids get back to school, but it's really about like, just having like like a routine every day. You don't really realize it until your kids start getting older, right? Because then you actually get in a routine. At your situation, it's just a shit show every day. It's just
every night is yeah. Anyway, we're working through it. Working through it.
No, It's great. It's great. All the things that the dads tell you is true. Listen, couple of things about me. Strazza's not here. He'd be rolling his eyes at me. Thinks I'm ridiculous. If you ever hear me say the word garden variety, just smack me. Just hit me aside. You have all my permission. I will not fight back. I deserve it. If you ever hear me use the term garden variety, get out of here.
Is this a garden variety bull market? Is that what we're in right now?
Can't even.
As far as bull market
garden variety pullback. Shut up. Sound like a moron. How about cautiously optimistic? That's criminal right there, that one.
I feel like everyone is cautiously optimistic, right?
Cautiously optimistic.
Isn't everyone that way?
Get out of here.
No? Is that just me?
Oh, okay. It's just so gross. No? You think I'm being dramatic? Strazza thinks I'm being a little dramatic.
No, but JC, I have a bone to pick. Yesterday in your morning note, you were talking about how new highs are good, and you said people panic at new highs, which we've discussed on the show, right? But it's also true that people panic at new lows. So
yeah,
it's not like they don't only panic at new highs, right? They panic at new highs and at new lows. Right? That's fair? That's
because fair. It's fear and greed.
Right.
It's not just fear. It's the greed and the FOMO where they panic to get in at the parabolic top.
I just trying to rewrite for some people, trying to rewrite the invisible script in their head that new highs are not a bad thing is a very hard thing to do. It's very challenging.
Good.
Yeah.
Good. Well, we want things that come easy to us. And it's part of our routine and kind of just common sense because we've looked at the math. We know the data, right? So the longer that it takes other people to have that common sense, the better it is for us, is it not? Right? So I'm all for people being confused and lied to and, gullible. Like I'm good with that, right? As long as it's not us, right?
Yeah.
And I could sleep at night because I'm out here in public telling everybody that they're being lied to and I'm showing them the math and showing common sense. So it's not like I'm hiding the secret. I'm happy to open it up and everybody here in the chat knows everything that I'm saying right now because they've been hearing me say it for too long.
You can sleep because you're cautiously optimistic. All right, let's do state of the markets.
Oh. All right. We have, ladies and gentlemen, the Dow Jones Industrial Average up this morning, up over 100 points this morning. 100 points for the Dow, trying to make a new all-time high today. You got S&Ps kind of flat, just under 67.70. You got the NASDAQ 100 flat as well, above 25,000. 30-year bond futures up 0.5% at 117.5. You got crude oil, up almost 2% on the day, pushing 63. Copper flat at 510. You got gold, new all-time highs, 4,050. 4,050 for gold. Silver making moves as well, 48.5, up another 2% on the day. VIX still at 17. I'll say that again. The VIX still at 17. All these markets making all-time highs. VIX remains, I don't want to use the word elevated, but I will say surprisingly not lower is probably the best way to explain it. Man, that really stands out to me. You got Bitcoin, 122,600, up 1% on the day, up almost 300 points to the upside. That's Bitcoin. Not far from another new all-time high. Ethereum, 4480 for Ethereum, still trying to work on this base since the summer. You got Solana, 222, up 2 points on the day. Nice overnight reversal there. Total crypto market cap, Mr. Spencer Israel, after closing at an all-time high on Monday, closed on Monday at 4.2. Here we are at 4.14. 4 trillion, 4.14 trillion. What stands out from the futures this morning?
I don't know. Not a whole lot to me. I mean,
gold, Spencer.
Gold stands out to me, right?
I mean, what stands out? Throw it
gold.
Up. Throw up the gold. Throw up slide 2.
Gold stands out. What I don't know. It's 4,053.
So this is the monthly and quarterly closing high for gold that we just saw, breaking through 4,000 this week. And throw up the sentiment down below. This one comes from our friends over at the American Association of Individual Investors. They poll their members, whether they're bullish or bearish or neutral, over the next 6 months. We frequently discuss their thoughts. And so every week they ask a question. I love how they do this. Love that they ask a unique question because they have their members' attention. They're voting anyway. Might as well throw in another question. Love that. We're totally stealing that idea for our sentiment data. I've thought about this a lot. So kudos to AAII. Very inspirational there. So the question this week, or last week, I should say, was, do you hold gold or other precious metals in your portfolio, either directly or through an ETF? 55% said that they do not when you add up the ones that are considering adding to their portfolio. So you got 55%. Simple. I do not own precious metals either directly or through an ETF. Do you think that's a lot?
Actually, it's not as high as I would have thought.
You would have guessed that more than 55% of people did not own any gold?
Yeah. But also, I don't know. Again, as with anything, I don't know who they asked, right? So
they asked a bunch. I mean, listen, I don't know if this is totally true. I'm pretty sure it's pretty accurate. But either way, the way I think about it has really been helpful. The American Association of Individual Investors, in my opinion, the way I treat it, you got a bunch of boomer Republicans in the Midwest and the South.
See, right? If that's true, then the 55 number is actually low. Sorry, it's high. It's high.
Are there some liberals in this? Probably, but probably not many. Are there non-boomers in this? Probably, but probably not many. Are there some coasters? Probably, but probably not many. And I don't know. And I don't know how accurate that description is, but I will say, as somebody who's been following this for 20 years, the fact that I think of it that way has been very helpful to separate like who's who. You got the futures traders, and then you got so you got the asset managers and the hedge funds. Those are those guys. The National Association of Active Investment Managers. Those are basically financial advisors. Right? So you want to think about it like that. I mean, you do whatever you want. That's how I think about it.
Anyway, so the 55% jumps out. Also, the 1.9%? That also seems low to me.
Well, those are just people considering adding. And
I know.
They don't have another answer. That was kind of like a throwaway question.
Well, if gold's at all-time highs, you tell me more than 2% don't have FOMO? I mean,
Throw up the silver. Right, so silver getting back to those highs from when the Hunt brothers cornered the market, early 80s,
Is that
1980,
actually?
I believe exactly.
Is that how far back you have to go?
Well, we were approaching 50 back in 1980 when the Hunt brothers cornered that market. We got back there in 2011, lost 80-something% from there, as we all know. You had that whipsaw and then the Ripper, and now here we are back at those levels. So now this is the third time in history. The first time you can't see here, this chart is just this century. But that chart goes back to the Hunt brothers, 1980, right around just under that 50 level. So just under 50, 3 times now. So the more times the level is tested, the higher the likelihood that it breaks. You know, you start seeing a 50 handle on this for more than a few days. And I think it's got 80 written all over it and then 120 after that. You know, I've said that for a long time. I don't know how long it takes. And I'll say something else about precious metals. You know, it's not just about how high these metals can go, right? Can they go high? Yeah, they can go really, really, really high. I have no idea how high they can go. Really high. For me, it's more about for how long can they go up. For me, there's a time factor, particularly in precious metals, because we have the history. And we know that these secular uptrends in the asset, they don't last a couple of years, a few years. They last for a decade or more. So, you know, for me, it's less about how high and more about for how long they can go up. So I think that that's the big takeaway maybe for all investors, right? So I obviously own some. I'm thrilled about it. But even if I don't, like let's say I didn't, and, you know, I want to think about how I want to be allocating assets. I consider to think that for the next coming several years, I don't know how many years, but for years to come, we want to be looking in this space for opportunities from the long side. Doesn't mean we always have to be extremely long. Doesn't mean that we're not going to have pullbacks. I guarantee you we do. I guarantee you we have corrections. They'll probably be vicious because of, you know, the massive uptrends. You probably get some pretty severe corrections along the way, for sure. But we want to think about those corrections within the context of history where precious metals they go up for a long time. These cycles are long, you know, and within those secular uptrends, you have cyclical declines, most definitely, and we will certainly see them here. But understand, in my experience, you know, these cyclical declines become opportunities to put money to work. So that to me, that's the biggest takeaway. A reminder that it takes a long time historically.
That's a good thought. I don't have anything insightful to add to that. But I appreciate you saying that because and it's not just silver, it's gold. You guys are talking about the breakout in gold and the commodity super cycle. What, 2 years ago now, right? And
when I was talking about gold 5,000, you thought I was crazy, didn't you?
Yeah, that was 2 years ago. And
you thought I was crazy. You thought I was just being, looking for a headline or something, right?
I mean, kind of. It's not like I was around for the last commodity super cycle. I mean, you know, I was alive, but I wasn't.
So now you know. Like, if you hear me say something like that,
I had other things going on in my life.
Like
right?
when I say Tesla could be the most valuable company in the world, you think I'm crazy, right?
No, actually, that one's not as crazy because we know Tesla can do some crazy.
So this
stuff.
one was crazier than that one. You think?
Yeah,
gold 5,000? See, I thought
because at least I've been around for Tesla doing crazy things, right?
Because remember,
you know,
Spencer,
crazy.
If you recall, people were like, "Oh, JC, why gold 5,000? Why 5,000?" My answer was because you got to get to 5 before you get to 10.
Yeah, right.
Is that crazy? Tell me how crazy I am again.
I mean, look, it sounded crazy at the time. It sounds a little bit less crazy now. But as a reminder, the team at All Star Charts is putting out a ton of metals research and trade ideas. They've been on this since before the trend. They've been on this for a while. So allstarcharts.com/gold-rush. Link is on the screen. The Sam and Jason do tremendous work, and they've been having like the best year of anyone because gold's been having the best year of anything. So
gold miners as an index, the gold mining index doubled this year. That has happened 0 times in history.
Yeah, it's crazy.
Throw up the silver with the Hunt brothers. I love history, right? You know, if you're a trader or an investor of any kind, you got to be a historian. You got to understand what's happened in the past. And the fact that we are right here at the peak of the Hunt
Wow.
Brothers corner. I mean, this is like, if you're a market nerd, like this is fucking cool. Like we are right back there at one of the most historic moments in the history of public markets of any kind. We're right there now. You don't think that's cool?
No, I do think it's very cool. I'm super into like Wall Street history. That's awesome.
And shout out to Bill O'Neill, the late great William O'Neill, rest in peace. Huge inspiration to me. I first learned of technical analysis because of him and his work, by the way. And I'm not the only one where that's the case. So he inspired a lot of us. And so he's the guy who came up with the term cup and handle. And I'm not like a big cup and handle guy. I'm not like, we call it like a Kardashian bottoms and faux show bros. And we have like our own like thing, but like, I'm not like a cup and handle aficionado, if you will, but this guy, it was. And cups and handles are continuation patterns. And so silver going up into that Hunt Brothers squeeze and consolidating in what is quite obviously a massive cup with a handle, right? That massive bowl shaped from 1980 up to 2010, 2011. That big bowl shape is the cup. And there's your handle after that. I mean, that is pretty freaking classic, if you ask me.
Are there? I'm no expert. I'm just asking questions. Are there rules for how long these patterns can last?
You know who would know? Joe Fahmy would know. I'm going to be with Joe in Vegas in a couple of
weeks. Must be because come on, like that's a 50-year pattern right there.
Yeah, but everything is symmetrical, right? So you're looking at the last 50 years, but put those 50 years within the context of the prior 300 years, right? So it's not like silver is like this new cryptocurrency that has no data. We have data for silver going back forever. So understand that prior uptrend. And what William O'Neill will say is that these cup with handles are continuation patterns. So this 50-year continuation of the prior hundreds of years, thousands, an upside resolution gets you over 100 easy, I think, 120. So anyway, that's how I'm thinking about it. Who knows what happens? Fortunately, I had no idea what's going to happen, right? I don't know what's going to happen. We could go higher, we could crash and go to, silver could go back to the lows at $4, $3. I had no idea. But I have a feeling that a breakout here is going to take it higher. And by the way, it's not, I know silver and gold gets all the love. What about platinum and palladium? Any love for those guys, Spencer?
Doesn't a rising tide just lift all ships? So
eventually, you were part of those conversations where we were like, yo, why isn't platinum working? Why isn't palladium working? Throw that up with the Sibanye. So this is an equally weighted chart of palladium and platinum. So this is 50-50 palladium, platinum, and black. And then in blue is a South African mining company called Sibanye Stillwater, which focuses, that's like your pure play in platinum and palladium. That's essentially like the CCJ of uranium, Okay. This is like that for platinum and palladium, right? It's like there's some other ones, but they're so little they don't even matter, like CCJ,
Yeah. Okay, I'm with you.
Yeah, so that's that. Right.
Wait,
so there's ways to get exposure.
Phil made a comment in the chat that Bitcoin is getting overshadowed by the metals, and I was actually going to say the opposite because the last time that we were in a commodity super cycle, crypto didn't even exist, right? So I wish there was a way to quantify what I'm thinking, but I don't know if there is. There's got to be a way to measure just like the greed, the FOMO, the virality of precious metals right now, because I bet you a lot of the people that would be all over this would have been all over this last time. They're up to their necks in Dogecoin, JC, right? And meme coins.
How what they own?
And they probably can't see over. They can't see over the top of the Bitcoin right now, right? So a lot of those folks are probably just like distracted by crypto. I would think.
Throw up slide 5. Actually, throw up slide 2 there. It doesn't matter. Either
that's just like a guess that I have, though. There's no way to know.
No, it's funny what Phil is saying.
It's more of a vibes thing.
crypto's getting overshadowed by what's happening in precious metals, which is, I mean, I don't necessarily think that's a bad thing for either one. Gold was doing real well for a while, and crypto was overshadowing that, and now it's the other way around. And I don't necessarily think. By the way, there's no evidence whatsoever that rising gold prices is bad for crypto or bad for stocks. There's no evidence at all. In fact, first decade in my career, gold and stocks were both going up for most of them.
I guess JH is right. I guess I just have to look at Google Trends every day, every week, and just see what the people are searching for.
All right.
And where in the Costco are the gold bars positioned, right? That might also
I
help.
would love to get the Costco data of like gold bar purchases like per month.
They do say in their earnings, they do say how much gold they've sold. They've said in the past.
Can we get that data somewhere? Let's see. I want to know how many gold bars on a monthly basis are being sold at Costco.
Okay, well, they don't say that, but they do say what they
data.
They have broken out their revenue from gold. I've seen it.
I'd want that data.
So.
How about throw up slide 11 there. Small caps. Small caps have been doing real well. Did you realize that small cap technology is up over 50% in the last 6 months?
I mean, I assumed so because we've talked about small caps for weeks and months. It seems like so. I couldn't have told you where small cap tech ranks among the other sectors, right? You know that better than I, but I would have assumed it would have been up substantially regardless because
50%. And small cap industrial is doing real well also. Notice the only small cap index that's down over the last 6 months is consumer staples.
Which shouldn't be a surprise.
But further confirmation. These are the types of things that you see in in strong markets. They don't want toothpaste and toilet paper and cigarettes and booze. They want tech stocks and they want machinery companies. And right? You know what I'm saying? What about slide 12 there? What's up with the Zloty?
That's the first Zloty mention on this show, and I don't even know how long.
Zloty right at those former highs from the prior cycle. Zloty, a key bellwether, an indicator of risk appetite for equities, the Polish Zloty. Look at when that Zloty, my neighbor says it's złote. Polish złote is what she says. But nevertheless, look when that started rallying. Before tech in 2023, the złote was already getting going. See that? It's already getting going. So for me, if we get a breakout here in the Zloty, I don't think it's a bad thing for equities. I don't think it's a negative for risk appetite. How many people you think are looking at the Zloty?
I only know of one, two actually. You and like Jason.
You think is Jason on the Zloty?
I don't actually know. I just kind of assumed he was, but Sam might be. Sam's on the Zloty. That's what he is.
Telling you guys who've been following along, how long have I been talking about this Zloty? You think that I've been looking at it for my health? I'm telling you.
I do think sometimes you lean into the ridiculousness of it. Because
tell me what's ridiculous about it.
I think you like the fact that no one else looks at the Zloty, right? You do like that.
No, it's not that nobody else looks at this. I mean, they're not looking at the Zloty specifically. They're looking at other maybe risk on, risk off currencies, right? They're looking at other Forex markets, and I think they're maybe underweighting the value of the Zloty. It's not, right? You know what I'm saying? Like they're looking at, at the end of the day, this is evidence of risk appetite versus the dollar, right? So if the dollar is ripping against the Zloty, chances are that's not a super strong risk on environment for equities, crypto. But if money's coming out and going into the fucking Zloty, you think that's because people are scared and they're buying consumer staples? No, they're buying tech stocks. They're buying emerging markets. They're putting money to work. That's evidence of risk appetite. Saying.
All right, let's bring on, speaking of risk appetite, let's bring on Kenny Glick, all right? See what he's risking this morning.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up.
Kenny's got the best bumper. I always say Kenny's definitely got the best bumper.
It is.
Kenny, my Aunt Gladys, she had a jacket just like that years ago.
It's funny that you mentioned Gladys. She's the woman that stepped over me when I tore my calf muscle during pickleball. How you doing? You right? You're okay? I'll kill you, Gladys.
Dude, why don't you come out? Let's play pickleball.
Well, where? Let's go.
We'll go to you want to take a lesson with like the pickleball king, or do you want to just play?
I give lessons, bro.
All right, I'm just asking.
Let's be clear now.
I'm just asking. So Danny, our CFO, he was in town, and the last thing I want to do is talk about accounting with my CFO. So I was like, why don't we play pickleball instead of the balance sheets and income statements? Why don't we do the right?
Nice.
So we took a lesson. It was awesome. I like how it's called the kitchen.
Yeah. Get your foot out of the kitchen.
Yeah. If you can't take the heat, get your ass out the kitchen. Be on a mission.
It's a fun game. It's like standing on a ping pong table.
It's like standing on a ping pong table. That's exactly what it is.
Yeah. It's mini tennis, but yeah, it's fun. Especially if depending on the level you play with. Some people take it way too serious. Like I can't take it too serious. It's a fun game. But man, I get it. I went to a competition once. Man, people just getting crazy. Anything competitive. But speaking of competitive sports, what we doing here, huh? You guys having a good time?
Is it a bear market? Market went down for a day.
I went down for like 3.5 hours. We milked that trade yesterday. It was like we were doing the live event, and it was awesome because we were talking about this trade that never fails. And while we were doing the live event, me and Strazza, by the way, Strazza can talk more than I can. I was reeling him in. That guy's a yenta, if you guys know your Yiddish. But
that's a great word.
We had a good time on the event, and while we were doing the event, we cut away to some live trades, and they were working while we were doing the live event. It was.
Can we drop the link to that, Spencer? Can you drop the link in the chat to yesterday's video? That was awesome. Steve Strazza, Kenny Glick, double teaming you.
Whoa! It was a good time, and the Q short. It was actually a perfect short. We got every VWAP. So basically, most of the time when you're a day trader, you got 5 days worth of VWAP, and that's where your stock's going to live unless you're going parabolic or you're getting hammered. And the Qs went from today's VWAP to the prior, to the prior, to the prior, to the prior. And each level, there was you saw the algorithms doing their work at those algorithmic levels. And it was just something to behold. And something to behold is just ASTS, my friends. So I've been trying to explain market mechanics. And the old premise of market mechanics was based on options. Back when I was a kid, no one even traded options. And you didn't have, weeklies, you had monthlies, you had 2.5, 5 point increments. And the market still is kind of programmed like that. So when you have a stock that breaks through 50, it starts ripping in 2.5 point increments. And then stocks that get through 50, they get to 80. So if you're a swing trader and you're in a momentum stock like ASTS, and once this thing broke 50, your target had to be 80. So now, once it broke 80, let me show you the chart. We were talking about this morning. It's not too late to get in, even though you've missed this monster move, because it's probably going to go to 87.50. And now you wanted to know why 87.50? Because that's the market programming. So when I say the market's rigged, that word is still used in such a terrible connotation. It's fantastic that it's rigged. You have a pretty good idea of what's going to happen next. So when you got the faux show bro back above VWAP on ASTS, sure, I'm miserable that I sold this stock at $8. I was in this thing at $8, but that doesn't mean you can't get involved today, right? So you got the little VWAP retrace. There's a little faux show bro. And then once it started breaking back above, and you guys know about the reactionary candle, there's the Verizon news. You got the inside action. And then inside, you get a retest. That's the Popeye moment. So it's refreshing down there. All right, let's gather some steam and work our way back to the top of the.
So hold on. I'm new to the Popeye moment. Popeye the cartoon.
Popeye the cartoon. I'm old.
All right, tell me more about
Popeye. So Popeye would be in trouble. His girlfriend would be getting beat up by Brutus, and he would eat his spinach and then come to the rescue. So the stocks, when they come back to the VWAP, today's VWAP, that's like a refreshing moment. That's them taking the spinach and getting ready to go save the damsel in distress right back to where they came from. And then when this thing broke 85, the target was 87.50. So when a stock hits 87.50, not 87.42, not 87.65, it went to 87.50. Exactamundo, my friends. Another reference you probably don't know anymore. Exactamundo. Look at that thing. 85 got you 87.50. There's no doubt here, friends. We're not here to debate whether the market's rigged anymore. I prove it every day live. We'll do it live. And there it is. And we just had a little, I got involved late and still made a little day's pay. Why not, right?
Just trying to make a day's pay. That's all. No big deal.
What I'm talking about, Home Slice. Yeah. What up, Spence?
What up? All right, I just dropped the link in the chat. The replay to yesterday's stream. Kenny and Strazza went for almost an hour yesterday.
Yeah.
Lot to discuss.
Legends.
I was reeling him in. It was
a lot
hilarious.
to discuss. Kenny's favorite time of year starts in like 3 days, right? It's the earnings season. Kenny said that this is going to be the most volatile earnings season ever. Right?
Should be.
So there will be trades.
Before we cut away, my friends, we're back in CRML. Listen, it's everything metal all the time. Put on some Metallica, put on some Maiden, and start buying these stocks. Little faux show bro action in CRML this morning. Look at this rip. Look at this rip right here. And where's it going? 12.50. Bang! 12.50. Sell it.
I like what you're doing here, Kenny, buying the metal stocks, playing heavy metal. Like that's how to do it. You're doing it right. You're doing it right, my friend.
We're having fun. And by the way, if you are in the stock, please sell a lot of it because it just ripped from 11 and change to 12.50. All right. We're out of here. Yesterday's event was funny because I was literally trading while we were doing it because I had that AHR trade on in the STZ. But yeah, good times, man. Good times. It's just, let's stay positive. Let's get rocking and rolling. We got a couple more events. Guys, sign up for my Wealth 365. And then we're schmoozing tomorrow. And then we'll talk about Vegas because we're going to Vegas, baby.
There's the link on the screen. Kenny's speaking at the Wealth 365 conference tomorrow afternoon. I think it's at 4 o'clock. I think so.
Yeah, I'm doing the close. Yep.
All right. See you there, Kenny.
All right. Good luck,
Good
everybody.
luck, buddy. Go give him hell. Give him hell, Kenny. I have no doubt that
must be nice.
Kenny will be the best presentation of that entire online conference by like a zillion.
Must be nice.
Like it won't even be. It's not even fair. Kenny, look at the close. Come on.
We got Jeff Hirsch in the house.
I like how Kenny does the heavy metal with the buying of the metal stocks. That's how to do. I used to order my lunch depending on what country stocks we were trading. So like if we're trading Vietnamese stocks, we'd order like Greek. We'd be way back in the day, like 15 years ago. That was real life. That's
things that you can do in New York and nowhere else.
You can do that in New York. You can't do that anywhere else.
Let's bring on Jeff Hirsch, all right?
All right. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Mr. Jeff Hirsch.
What's up, fellas? Can you hear me all right?
We hear you all right. I like those headphones.
Well, these are the workout headphones. I left the mic at the other facility, so I figured I'd throw these on.
Must be nice having so many facilities.
As long as I have my faculties with me.
Hold on. Look what I got.
What'd you get?
Where is it?
What
I
you
got a bunch of almanacs.
Oh yeah. Guess what you need though?
Yeah, where's my 26?
Well, it's going out, man. Been a little bit caught up with this raging bull market. So I got to get you a book. You got to get Strazza one. We got to get one for Spence and Kenny. I did a little schmooze with Kenny a couple weeks ago. I still got to get him a book.
Here it is. I was looking for this one.
Oh, yeah. What's the best investment book of the year in that one?
Dude, you're the one who wrote it. You should know. I don't know. What page is it?
I like 86 or 100.
Look, guys, look at this. Me and Jeff weren't even friends yet, right? And there I am reading the 2008 Stock Traders Almanac 08.
Is that your first copy? No.
I like how you put the donkey and the elephant.
It's an election year, bro.
No, thanks. That's like memorabilia. It's in rough shape though, because I beat the hell out of these things. You know, I write all over them. You know,
That's the way to do it, man. I got some in plastic from just after I was born because they got
dude,
so
I got to
beat
get
up.
an inaugural issue. Is there a bigger fan of the Stock Traders Almanac than me in the world? Come on, I got to be up there in the conversation.
They're up there. I would say top 5 at least.
Top 5 biggest fans of the Almanac. That's pretty good. That's good.
No bullshit. No bullshit.
Who else? Sam Stovall, right?
Yeah. There's a few others. Sam Stovall's up there. Larry Williams. I mean, he was back there.
Sam Stovall might be where I first learned of the Almanac, as a matter of fact.
Really?
Yeah.
That's cool.
Maybe because I used to read Stovall. I used to follow Stovall pretty closely way back in the day. I don't know if that's where I learned. I may have learned of the Almanac because you spoke at a Bloomberg event in New York like a zillion years ago for the CMT.
That was.
How long ago was that?
I think that was after the. Oh wait, I think that was like 2012 or something. Remember we looked it up.
That late? I don't know if it was that late, dude.
That's when Paul Sienna took us, me, you, and Newton, to Uncle Michael Bloomberg's seats behind home plate.
Maybe, but you had spoken there before.
Yeah.
Yeah.
Down in that cool room down in
the cool room. Yeah.
In Midtown.
Shout out to Bloomberg. That building's a lovely building. And they got snacks in the lobby. You just walk right up. Start eating a banana, chips, nuts.
Peanut butter, right?
Yeah, man. I mean, you got your coffee. They do it right, those guys. Shout out to Bloomberg. Must be nice making all that money, right? We know why they're giving away all that free shit. Like they crush. So Mr. Hirsch.
Yes.
One of the things that stands out to me, and I want to show this. If you guys can throw up the new slide 2. So, as an avid follower of annual seasonal trends, I am top 5 biggest Stock Traders Almanac fans in the world, according to Jeff Hirsch. No, not that one. Hirsch doesn't want to talk about credit spreads, bro. Throw up slide 2.
VIX I could talk about. Spreads, not so much.
So August and September combined, worst 2-month period of the year.
Yep.
And
pretty good.
I see the Dow up 5% during that period. S&P's up 5. Q's up 6. Small caps up double digits. Asia up 13%. Africa up 15%. Latin America up almost 16%. For the worst 2-month period of the year, not bad. Not bad.
Dude, it's great. Remember our discussions about when seasonality doesn't happen, what does it become? You and I have been through this.
Signal.
It's an indicator. I got my quote, the old Edson Gould quote that we throw out there. If the market doesn't rally during bullish seasonal periods, a sign that other forces are more powerful. When that period ends, those forces will have their say. Well, I flipped that. You and I flipped it together. When bearish seasonality doesn't transpire, it's a bullish indication that more powerful forces are at play. I mean, looking for my rally cap over here, I've got expectations for a Munster Q4 rally. I'm looking for S&P 7100. That's a 20% gain. Not only was August and September great, but the worst 6 months, the sell in May period, now that we're in the buy in October, get your portfolio sober period, was the best.
Oh, wait, you're supposed to get the portfolio sober? I thought we were the ones who were supposed to get sober.
Well, some of us are
you doing a dry October?
I'm doing a dry for a while.
Wow. Good on you.
Yeah.
Good on you.
But it was the the best worst 6 months since 1950. Up 20% April 30 to right now. I mean, it's still going on. We still got some time left. I'm pretty comfortable that we're going to get a little bit more before the end of the worst 6 months in October. We're all in. We've got our buy signal, our MACD seasonal signal. We've got our baskets of stocks out there, picking some small stocks. I'm having trouble. I've had trouble looking for bearish indications. It's just not happening. Gains beget gains. Next year, once you see your 26 almanac, you'll see that we're looking for some pullback, correction, bearish action next year, but that's next year.
Hold on. Let me ask you this, Jeff. Let's just skip right to that, right? So everybody knows, maybe if you don't, the best 3-month period of the year is between November and January, that 3-month period, which starts in 3 weeks, basically. And so, October is the bear market killer. What do they call it? The bear market killer?
That's what Yale called it.
Right. So that's you get the ends of declines in October, and you buy that weakness in October. If you even get it, the last few years you've gotten weakness into October, and if you bought it, you did very well, and we did, right? So great.
Yep.
So now we're not getting any sort of correction coming into October. Quite the opposite. Market's been great. So you got your best 3-month period, November through January, and then February tends to, stumble before maybe you get some spring strength. And then, but when you zoom out, it's the midterm years. The midterm years are the problem, guys. The midterm years is where the problem. Is it too easy though? Too easy, Jeff?
It does worry me. It can be too easy, but it's also Q2, Q3 that have been that weak spot. I mean, I put some charts out there. I could throw one up if you want to see that weak spot. But
yeah, throw it up.
All right, let's see if I can do a quick share. I got a couple of slides laying up here. Screen.
You got his screen, guys?
Is that there? Here, let me just pop through. We also got the new all-time highs in October.
First of all, I love that you still use PowerPoint.
Thanks, man.
Dude, you're so old school.
I'm not even doing the slideshow. This is the 69 almanac as we scroll through.
That's a 69 almanac. Good year.
Yeah. Is that your what? Is that your year? No.
Yeah, bro. I was born in 1969. How old do you think I am?
No. Why is that a good year? Because the summer of love, or what? Why is that good for you?
Orioles.
69 was the last time the Jets were good.
It was the greatest year of my I think it was the greatest year of my father-in-law's life. Like the Jets.
I was 3.
Didn't the Rangers win also?
Wait, Jeff, can you make it a little bigger so we can see?
I'm trying to.
Yeah, right. There we go.
How's that?
Great.
Look at that. Boomer in the house, working the technology. So yeah, weak spot, Q2, Q3, midterm year, sweet spot. This is where bottom pickers find paradise. Q4 midterm to Q2 pre-election year. You can see it in the bar chart on the left side. This is from page 46, I believe, of the 2026 Stock Traders Almanac, which you gentlemen will have in your hands shortly. Yeah, 46.
Woo,
Welcome to the sweet spot of the 4-year cycle. But post-election years, as we wrote about earlier this year, have been the best year of the 4-year cycle since 1985. Let me go back to another chart here to make that more apparent to you. Let's see. A couple of stocks we're showing you there. Whoop, Bitcoin. There we go. This is the green line is the post-election years since 85. This is why we're expecting this Q4 rally, monster one. And but the thing that's still consistent is the midterm year, 18, 22. We had that classic midterm October bottom. I know you were calling a low a little bit earlier with the new lows and new highs reading back in June, but that October 22 low was a classic midterm bottom, and we're looking for some weakness going into mid-year of next year, maybe even earlier. Yale always taught us, and we've done the studies on it, that year ends make great exits. Our buddy Josh Brown has talked about, markets make their highs, at the year end. That's, December's, it's rally season. Santa Claus rally, we've all spoken about that. So ride the rally for now, but when the calendar turns, let's get a little more cautious is my take.
So, the old just buy midterm elections. I love that. That has historically been a pretty fantastic opportunity. but that weakness next year, I think about it a lot because, when you look at these momentum thrusts, right, and you look at different breadth thrusts, there's one in particular where you're getting 55% of stocks that are above their 20-day moving average, and you get that breadth thrust. And that tends to go for a year, right? And that happened in May. So a year after that is in Q2 next year, where very conveniently the seasonals really turn negative for the overall market going into those midterm elections. I just question, does it make too much sense? Too much sense?
Yeah. You always got to ask that question. You got to be ready for it. I agree. I mean, I was saying it last year. The 4-year cycle was firing, and it's going to stop working. It always does. Nothing works 100% of the time. I don't work 100% of the time. I've been known to have to sleep once in a while, play golf, etc.
Dude, let's play golf, man. I haven't played once this summer. Isn't that a crime? It's a crime.
That's a crying shame. That's right. Yeah.
You're playing weekly?
I was not right now. We're kind of in almanac season, so I'm focusing on.
Oh, almanac season. Hello. I like the sound of that. No, I love that.
Yeah.
Jeff, what else, before you hop, what else should we be looking for going into year end? I know there's certain sectors and industry groups that tend to do better than others. You got your small caps over large coming soon. Can you talk a little bit about that?
Well, small cap season as well. I mean, the old January effect starts, right around late October. Big hit.
So the January effect, hold on. The January effect, folks, starts in late October. All right.
Really,
so can you clarify exactly what that means and why that's the case?
It starts to turn in late October.
And what is the January effect?
The January effect is a tendency for small caps to outperform large caps in the month of January. It's an old study going back to the 40s by Sidney Wachtell, who was an old investment banker back then. And what we've seen is a shift where really most of that effect takes place in the last 2 weeks of December. It starts to turn in late October, but the last 2 weeks, that's after tax loss selling is over, and everyone's piling in with extra money from year-end bonuses and that sort of thing. Small caps are already on the move. The other analysis and research on small caps is that historically, longer term, when the small caps start to outperform, not just seasonally, but in general, it's sort of towards the end of that bull, which lines up with our, confluence of seasonals and thrusts and 4-year cycle discussion that we're having. So small caps are outperforming. It's kind of a little signal that the market's running its course. We've got a couple of stocks that we've put out there that are moving. A lot of the sectors are in play. Bitcoin, we're in. I mean, that's another fourth quarter move. I like the IBIT. Me personally, that's what I trade the ETFs. There's a lot. A couple of stocks that we like. One that I'm talking about is called StoneX, SNEX. They run commodity and forex, just all kinds of trading. I own it. Came through our fundamental screens, technically sound, under Wall Street radar, not super followed. Kind of right around where we put it in the newsletter and the portfolio. So that was one of our so there's a bunch of different sectors we're looking at. But if you look at the almanac, October is when the bulk of the market's sectors come into play. Things like utilities tend to go out of favor. I know there's a big trade there. We've been in that since March because it's a seasonal there. It's getting a push from the AI, energy needs and the data center build-outs, but and the nuclear boom, no pun intended there. But seasonally, it starts to run its course. Gold, we're still in. We sold our miners. We got 20% gains there. We're still in the GLD. There's sort of a de-dollarification going on out there with Europe, gold and Bitcoin, and foreign markets outperforming U.S. I know you were talking about the Plotsky or whatever it is.
The Zloty.
The Zloty.
Yeah, why are you hating on the Zloty?
I'm not. I went to school with a kid named Plotz, so I just.
Dude, first of all, I mean, it's a great indicator of risk appetite. As somebody who follows the intermarket analysis and what the forex markets are doing, and the dollar can see how if money's leaving the United States dollar and the safety that represents into something like the Polish złoty, then chances are there's some appetite for risk out there in the market is all, right?
Maybe getting a little frothy, but not yet.
You think?
Not over yet. Maybe.
And then from an almanac, from a seasonal standpoint, I just want to make sure that everybody just, the takeaway here for me anyway is the market tends to behave in certain ways throughout different times of the year. As humans in different seasons, we behave differently. We hang out with different people. We wear different things. We go to different places. You're not going to the beach in the winter. You're not going skiing in the summer, right? There's holidays. There's time to spend with family, time to spend with friends, time to go to school, time to go to work. There are just different times of the year. And as somebody who analyzes human behavior, if you think that those changes throughout the year don't affect the decision-making being made in the market, not to mention all of the, payrolls and bonuses and 401k contributions and all the financial mechanical things that are taking place as well, right? So just understanding that that's the case. So with that
especially from the institutions, that move
sure.
out big money. That's what drives the quarterly behavior of the market. The institutions moving money in Q4. But go on, you're doing great.
Well, my point is, so if the market is not doing those things, that's the signal, right? The market's supposed to be super bullish from November to January, and it's not. That's a problem. Guess what happened before the 08 crash? That, right?
Yep.
So if the market is supposed to be weak and it's not, it's strong, that's the signal. Guess what happened before Trump 1.0, right? The market was pretty strong going into that election when it was supposed to be weak. And guess what? Not only the market did not crash after Trump got elected. In fact, it was one of the greatest years ever and the least volatile year in the history of the stock market. And the strength during a seasonally weak period was already pointing to that. So that's, that to me is, I think, the biggest takeaway of all this.
For sure. No bearish season. No down market. The bearish season is totally bullish.
All right. Before you go, I do have a favor. I need some memorabilia, Jeff. I'm a top five biggest fan of the Stock Traders Almanac. That's saying a lot. I need some memorabilia. I got so much cool shit. I got Wall Street Journal from the 87 crash. I got New York Times from 29. I need some dope Stock Traders Almanac memorabilia. I need like some early editions. I need something. I need it to my collection.
Okay, early editions. I'll go dig through what we have.
See what you can get for me.
But there's no 68s, there's no 69s, there's no 70s. So nothing of the.
And when was the first printed edition?
1968.
So 68 was the first printed edition.
Yeah, it came out in the fall of 67.
But before that, it was just like in print, just the papers before that?
No, it was the first. It wasn't anything.
So the first edition was printed.
Was printed 1968. My
and
father.
No 68s left.
No, I have one, and it's in plastic.
Got it. All right, fair enough.
Yeah, just.
I was gonna say my 21 Cabernet Sauvignon. Sorry, I don't got any of those left either. I got some wine. I'll trade you some old almanacs for some of my wine. Deal.
All
right, I'll meet you at the golf.
You got it. Thanks, Bob.
All right, adios, Jeff. Nice. Dude, I have a pretty good collection, and the fact that, I've got my old almanacs, but I don't have old school ones.
You're just over here making deals left and right.
You saw that?
Yeah, just over here.
I just negotiated a barter for some wine.
That's how it's done.
Almanac
apparently.
I put him on the spot. What's he gonna say? No?
Yeah.
In front of everybody? Be like, no, JC, I'm not giving you shit.
Hey, JC, one thing I wanted to ask you about gold, and then we can hop. But every day I'm seeing another article about why gold is at all-time highs, what's behind the move. My question is, do you care about that stuff?
Do I care why gold is at all-time highs?
Yeah.
I'm gonna probably write about it because it's been a minute since since I've talked about this. But part of the reason why I thought that gold going to 5,000 on the way to 10,000 was not only a possibility, but probably a pretty high likelihood was it's a Forex situation, right? So it's not just gold it's at $4,000 priced in dollars, right? It's $4,000 an ounce, right?
Right.
If you flip that on its head and you take all the currencies in the world and gold is the denominator in all of the Forex markets all over the world for many years. All of those currencies were making new all-time lows priced in gold, almost all of them. So in other words, gold priced in euro, British pounds, Aussie, Kiwi, South African rand,
and that's when they say that gold has been like an outperformer for forever. That's
right.
what they're
So
talking.
in
That's what they're talking
yen,
about.
for example,
Yeah.
gold had already broken out above those 2011 highs in all of them. So in other words, all of those currencies were making all-time lows in gold, except for Swissy and dollar. And then what happened? So if it's like, okay, well, all these keep making new lows price in gold. Eventually, Swissy is going to break too, and eventually the dollar also. And sure enough, it's just a domino effect. It was inevitable. It was more of a when than an if, right?
Yeah.
So what's the reason? The reason, I hate to be Mr. Fiat guy, but it's just math. The fiat currencies are losing value to the non replaceable, right? Because you could just reproduce more currencies, right? They're losing their value priced in quote unquote real money, whether you consider gold real money or not. The math is very simple. It's not a conspiracy theory. It's literally just math that all of these currencies all over the world have been losing value relative to gold for a long time. It's just that more recently, the dollar has joined that party and Swiss franc has joined that party. But it was happening all over the world, right? So if you're wondering why, I mean, mathematically, that is what is happening. Now, why is that happening? Money printing, the governments, they don't trust the government. Who knows about any of that? But what is happening is that the fiats are losing money, losing value relative to the hard metal.
There's that meme I'm thinking of where you got like two people who disagree, but then they agree in the middle, and that's gold and the crypto maxis, right? The gold bugs and the maxis meet in the middle, right? Anti-currency, right? Anti-dollar.
Yeah, maybe, but the math doesn't play, right? The math in crypto is not the math that we're seeing in precious metals. The math in crypto is that they're just more tech stocks.
Sure,
right. Crypto, they're just more tech stocks. You're not seeing this like whole like fiat thing, and that's not what it is. And also, gold is gold at 30 trillion?
I have no idea.
Gold right now is at 27.3 trillion.
All right, so it's a lot of cryptos.
And Bitcoin is 2.
Yeah, okay, it's a lot of Bitcoin. Fair enough. All right, that's the opening bell, JC. Let's get out of here. We have Kenny going live on the channel at 11 o'clock. He does it every single Monday through Thursday. That's his show, the long and short of it. Jeff Mackey going live at 1 o'clock with myself. And that's it for today. So thank you for watching. Thank you, Jeff. Thank you, Kenny. Thank you, chat, as always. We appreciate you. Check out all the links in the description, all of our free stuff, free emails we put out every day. The link to Kenny's replay is pinned to the top of the chat on YouTube. And go make some money, all right?
Adios. YOLO response.
Run it. I can't take no loss. I don't even know what it costs.